This is an FPV drone with a GoPro camera built into it. It's a perfect package for first-person view flying because it combines a tiny camera with a tiny monitor that lets you see exactly what the drone sees without any lag or delay. And it was pretty cheap too, costing only about $260. But this product doesn't exist anymore because DJI just discontinued it. And there are two big reasons why they did this. The first reason is the weak dollar. Over the last year, the dollar has dropped 8% in value compared to other major world currencies, which makes products sold in the US more expensive for international buyers. So DJI decided to raise prices in the US instead of passing on the losses to their Chinese customers. But the second reason is even more significant, and that's the latest round of US-China tariffs. You see, DJI has been hit with a 145% import tax on all of their products sold in the United States, which has made them extremely expensive overnight. Their cheapest drone, the Mini 4 Pro, now costs $700 more than before, while their flagship Mavic 3 Pro is a shocking $2,000 more expensive. That's a bigger increase than we saw in the last round of tariffs in 2019. And if we look at DJI's portfolio, there's even worse news. Some of DJI's most popular drones, like the Air 3 and the Mini 4 Pro, are listed as out of stock on the US website. Now, when we say out of stock, we don't mean that these products are temporarily unavailable. Instead, DJI itself confirmed that they have permanently stopped selling these products in the US due to the new tariffs. So, given that a large portion of DJI's best-selling drones are no longer available in the US, this begs the question, are American consumers about to pay triple for a crappy drone? Or is there a way to buy DJI drones for less? To answer this question, let's take a deep look into DJI's business model and how their pricing works. When DJI sells a drone, they don't make very much profit. They operate on a razor-thin margin of 5%, meaning that if they sell a $1,000 drone, they only make $50 of profit. The rest goes straight back into research and development. That's why when you look at DJI's balance sheet, they have $1.6 billion in assets, but almost $1.7 billion in liabilities. Essentially, DJI uses debt to finance its operations, since making money from hardware sales isn't enough to keep up with rising labor and material costs. But even though they don't make much profit from selling drones, DJI does make money from software and services. For example, every time you upgrade your controller's firmware or register your drone with the FAA, DJI charges you a fee. So across their entire fleet of 70 million drones, these small fees add up to billions of dollars per year. But the real goldmine for DJI is their monthly subscription service called DJI Fly. This is a $100 per month service that gives you access to exclusive features such as extended flight times, AI landing, and obstacle avoidance. It's a great service, but it's not very popular because most drone users aren't commercial operators who need the extra features. But here's the thing. When DJI introduced this subscription service, they promised that none of their products would ever be bricked or lose functionality if you didn't pay for it. But after the US Department of Commerce added DJI to its blacklist, suddenly some DJI drones began losing GPS functionality after 30 days unless you paid for DJI Fly. So DJI has essentially turned from a hardware company into a software company, which is one of the reasons why they've been able to maintain a valuation of $87 billion despite declining revenues and a shrinking market. The other reason is foreign investors who still believe that DJI will eventually win the trust of the US government and resume selling to the US military. But until then, DJI's strategy is to rely on their high-margin software and service revenue to sustain the company while trying to appease the US government so they can resume exports. A big part of this effort is shifting production away from China. Over the last few years, DJI has opened factories in Germany, Hungary, and the UA. But as we explained in a previous video, these factories are struggling to meet quality standards and simply can't produce enough drones to satisfy DJI's global demand. So when DJI says that the Mini 4 Pro and Air 3 are permanently out of stock for the US market, we actually think that they meant that DJI has permanently discontinued these products for the US market. We doubt that DJI would relocate manufacturing from China just to continue selling a niche product like the Air 3. And based on customer feedback, we suspect that DJI wouldn't be able to sell many units even if they brought the Air 3 back to the US. Since the 145% import tax accounts for 75% of the drone's final price, customers would be better off buying a more capable drone from another manufacturer. In fact, this dynamic is playing out across the entire industry. Just look at the top 5 best-selling drones on Amazon. Not only is every single one of them more expensive than before, but there's also a mix of Chinese and non-Chinese brands. For example, the Rise Tello is an affordable quadcopter that's built by DJI subsidiary Rise Tech, but it's made in the USA, which means it's exempt from Chinese tariffs. So it's currently the cheapest drone in DJI's portfolio at only $250. But the Tello is not without drawbacks. Unlike DJI drones, it doesn't have advanced obstacle avoidance or the ability to fly autonomously. It's very limited when it comes to software. Also, it only shoots 5-megapixel photos and 720p videos, so the Tello is mostly a toy rather than a serious drone. If you want something a bit more powerful, you might consider the Parrot Annapurna, which is a French drone that costs $400. The Annapurna has a 4K camera and advanced obstacle avoidance, but it only lasts for 18 minutes per charge, which is half as long as DJI's competing drones. There's also the Autel Evo 2, which costs $200 more than the Annapurna. It looks a lot like the Mini 3, but it costs $200 less, and it doesn't have any import taxes. On paper, it seems like a great deal, but in reality, it's a terrible drone. It only weighs 9 ounces, which allows it to bypass FAA regulations. But this weight limit severely restricts its battery life, wind resistance, and camera stabilization. It's honestly just a glorified flying potato. Overall, these examples show us that the tariffs are taking a heavy toll on the drone industry. There are alternatives that cost less than DJI drones, but they're either low quality, difficult to use, or subject to future tariffs. With that being said, this doesn't mean that DJI drones are impossible to buy for less. In fact, we have 3 secret tips to save money on DJI drones. First, you could buy them used. DJI drones hold their value very well, so you won't have to worry about paying 70% more for a used drone. Second, you could wait for DJI to restock. When products are out of stock, they tend to come back within 1 to 3 months, and if you can catch the drone during this window, you'll probably be able to avoid the price hike. And third, you could find retailers that haven't updated their prices yet. But whatever you do, please don't support YouTubers and media outlets that are profiting off of fear-mongering. The reality is that the US government has never had DJI on a trade blacklist. Up until recently, the US government actively bought DJI equipment to the tune of $50 million per year. Even the entity list is nothing new. It was created in 2019 to pressure Huawei and ZTE, 2 Chinese telecom giants. Adding DJI to this list is just a symbolic move that hasn't stopped other companies from doing business with China. So please use your common sense and don't fall for clickbait articles that claim DJI is about to blow up or become obsolete. Speaking of clicks, that's all for today. Thanks for watching, and we'll see you guys on the next one.